In this video, I want to talk about why buying added years of service was so beneficial for teachers when thinking about topping up their benefits from the teacher's pension scheme. The added years scheme has been replaced now by a new version, but the old scheme was very valuable. Sadly though, many teachers were steered away from it towards alternative ABC arrangements. So by the end of this video, you'll know why added years were so superior to any other form of additional voluntary contribution arrangement, and what to do if you were sold something else. So let's start at the beginning with what do we mean by buying added years of service? So-called added years is a concept within the teacher's pension scheme that allowed members to purchase additional years of pensionable service. This was a valuable option for teachers as it can enhance their retirement and other benefits in several ways. Firstly, buying added years enhanced pension income. Added years increased the number of years of pensionable service used to calculate retirement benefits. Now, most teachers do not build up enough years in the teacher's pension scheme to achieve maximum benefits just through natural service. Time spent studying before starting work generally means it won't be possible to have a 40-year career, which is the number of years needed for maximum benefits. So if a teacher joined the scheme in their mid-20s, say, the scheme allowed the missing 5 years to be bought, thus giving maximum benefits at retirement. Whilst this was a big benefit on its own, added years had other valuable benefits too. Early retirement being one, the opportunity to retire early is one of the most popular options for people looking towards retirement. Added years allowed you to do this, building up an unreduced pension through the purchase of extra years of service. Added years also gave flexibility in retirement planning. Added years was a more flexible arrangement than is often believed. Members of the teacher's pension scheme could choose to buy added years at different career stages. So for example, a young teacher just starting out may only have been able to afford 1 or 2 extra years, but a fully qualified senior teacher should have had scope to purchase more as their career and salary progressed. This flexibility allowed adjustment to the size of the pension benefits to suit individual needs. Added years were a very tax-efficient arrangement as well. Contributions made to purchase added years are usually tax deductible. This could provide tax benefits for higher rate taxpayers, making the added years option even more attractive, as it permits high rates of tax relief to be granted at source, meaning you don't need to make a claim through HMRC. And finally, added years gave additional protection to dependent family members. The teacher's pension scheme provides benefits for widows, widowers, and children. By increasing pensionable service through buying extra years of service, teachers can increase the financial security of family members in the unfortunate event of death. So that's a quick summary of why added years was such a good option for enhancing scheme benefits. However, I've represented very many teachers over the past 20 years who were advised not to buy added years, but to contribute more for their retirement with an FSAVC pension plan. Now, FSAVCs, which is an abbreviation of Freestanding Additional Voluntary Contribution, is an investment-based product which builds a retirement fund based on the contributions being invested in assets such as company shares and bonds. There are no guarantees, unlike with added years, and poor investment decisions and poor investment performance will lead to a reduced fund. This is in contrast to the benefits that are paid from the teacher's pension scheme, including added years, which are derived from length of service and salary. There is no investment risk involved. So you may wonder why IFAs and insurance company salesmen would recommend FSAVCs instead of suggesting added years. Well, in short, it was self-interest that drove over 1 million FSAVC sales, mainly to public sector professionals. The profits and commissions from steering people away from added years were so large it was almost inevitable the financial services industry would recommend FSAVCs in the majority of instances. If this happened to you and you ended up with an FSAVC, it may be the case that the salesman did not follow the regulatory selling rules, and that would represent mis-selling. So what are the common signs that mis-selling might have happened? Well, I see the same breaches of the regulatory selling rules crop up time and time again in sales literature. Here are just a few of the common signs of mis-selling. Not being fairly advised of the pros and cons of all available options, being told an FSAVC was the only option, not having the investment risk explained fully, and not being told about all the charges that would be levied on an FSAVC, therefore impacting on performance. So what can you do if you suspect you were missold an FSAVC? Well, it's never too late to get your retirement back on track, even if you are in retirement now. It is possible to prove mis-selling and be compensated accordingly. That compensation should be of an amount to put you back in the position you would have been in if you had taken the better option of paying extra into the teacher's pension scheme in the first place. Now, don't worry if this happened some years ago and you have stopped paying into the FSAVC. 9 times out of 10, I do still find the original sales paperwork in the seller's archives. As long as you can remember the name of the company that administered your FSAVC policy, I can investigate the sale and obtain compensation for you if there is evidence of mis-selling. So finally, what are the first steps to finding out if you might be owed compensation, and how do you go about claiming it? Well, if you suspect you are a victim of FSAVC mis-selling, you're not alone, and you must not feel there is nothing that can be done because the sale was most likely a long time ago. Many people have challenged the advice they were given and been duly compensated. So it's crucial to seek advice and guidance to address the impact of mis-selling on your retirement savings. I set up Greg Vaughan Financial Services and Pension Claims with the sole aim of helping people do just that. So please feel free to get in touch for a free, no obligation assessment of your FSAVC sale. I hope you found this video helpful and informative. If you think you're a victim of mis-selling or just have some further questions, you can find out how to contact me at www.pension-claims.com.